How do you know if the profit that you're seeing in your business is actually sustainable or if it's fragile and can disappear the moment something changes in your business? Because not all profits are created equal. This video is going to be the last piece of the puzzle. In our hub video, we talked about how to tell if your business is actually making money. We moved on to unpack profit, bank balances, the difference between gross margin and net margin. And in our last video, we looked at situations where your profit is misleading. And today, we're now answering the question, how do I tell if my profit is sustainable? So a common trap that founders and business owners fall into is the assumption that the profit that you see today is going to be the profit of the future. But as we discussed in our last video, profit can be inflated by temporary conditions. A one-off sale event can inflate your profit. A missing invoice from your supplier or a delayed invoice from your supplier, deferred expenses, can show a healthy net profit that doesn't include the full picture. Under investment into your business, where you're not investing in your business to sustain it long term, is going to show a healthy net profit now, but not necessarily into the future. And finally, a big piece of this, and small businesses do this quite often, is not paying the owner. So your profit is showing well on the paper, but you're not paying yourself well. And the profit is not telling us, the profit is not accounting for a very important cost, which is the cost of the value that the business owner brings. And that's going to be a huge, huge value to the business. None of these temporary conditions are going to show up in your profit figure. So your profit figure can look strong even if the foundations of your business are weakening. So let's talk about the vibes of sustainable profit. Sustainable profit has a specific feel to it. It's not going to be relying on constant firefighting, delayed maintenance, or personal sacrifice. No, sustainable profit means the business can pay its operating costs. It can reinvest the money it needs to keep functioning. It can compensate its owner fairly and still produce a surplus repeatedly. And it accomplishes this without panic, without stress, in a calm, structured manner. If your profit exists or is inflated only when you're making a personal sacrifice and not paying yourself, or you have one big event, or you have expenses that have not been paid yet, by definition, your profit is fragile. Because the moment those things come together, it may be that your business is not profitable. So here are a few high-level signals for you to look out for. You know your profit is fragile when it disappears as soon as you start paying yourself. You're constantly delaying reinvestment. Your profit figures fluctuate wildly without a real understanding of why that's happening. A healthy, sustainable profit is going to survive normal fluctuations. It's not going to rely on heroic effort from the business owner or delayed payments and timing issues. So the key thing for you to understand is not the number, but what that number depends on. A simple and useful way to think about it is going to be, you ask yourself this question. If you stopped pushing so hard, would your profit still exist? So in practice, most stable businesses are not going to have a large, healthy profit in one specific period. Their profit figures are going to show up quietly, sustainably, with no drama. And a fragile profit is going to require constant attention, heroic effort, sacrifice. Sustainable profit barely asks for your attention. So the next natural question that you're going to ask is, so Fred, if my profit can be healthy but still fragile, how do I tell, or where do I pick up this fragility in my business? And the answer is going to be your cash flows. And that's what we're going to unpack in our next series on cash flows.